What is going on, guys, and welcome back to another very exciting video. In this video, we're going to be talking about PayPal, and PayPal is a recent addition to my portfolio, and what I've been doing recently is looking into every aspect of the stock as I build out my position. So what I wanted to do in this video here today is I wanted to look at PayPal, some interesting buys that have been going on in the market. Then we'll take a look at the bull versus bear case for PayPal, and I want to give my opinion on some of these thoughts from an article that I read here today, and then we'll go over some valuation metrics as well. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Before we get into all of that, let's take a look at PayPal's stock chart. We can see here today the stock moved up 1%. The market was actually closed today for Juneteenth, and over the last 5 days it's moved up around 4.35%. Over the last month, up over 5%. Over the last 6 months, it's actually still down around 3.25%. It had a large drop off back here after earnings, and if we look at the last year, it is down around 8.2%, and over the last 5 years, that's where we see a very significant trend down. From the highs here, the stock is down over 78%, and if we look 5 years ago, the stock was actually trading at $85 and is down almost 22%. And the interesting buy that we saw on PayPal stock actually came from a US senator, Senator Thomas Tuberville. He is the senator for Alabama, and he purchased on June 15th around $500,000 to $1 million worth of PayPal stock. I always like to say on this channel, do not buy a company just because someone else did, and that is very important to keep in mind here. It is often that these senators are just buying into these because they want them in their portfolio. Sometimes there will be things going on with the government that will lead these senators to buy into them because of policy changes, but in my opinion, that's probably not what's happening here. So what I wanted to go over in this video is the bull and bear case versus PayPal, and this article, in my opinion, has a good layout of both of those cases, and it's titled PayPal Solid Financials, Reasonable Valuation, and a Great Opportunity for Income Return, and it was posted today on Seeking Alpha. Let's start off by taking a look at the bear case against PayPal, and we will start by looking at the operating margin. The operating margin has fallen from 16.8% in 2021 to 13.94% in 2022. And one of the ways that PayPal is really going to address this margin issue is by reducing their headcount. They don't need as many people as they added. They were one of the companies that added a large majority of employees over the last couple of years, and they have started in 2023 to reduce that headcount. So they laid off 2,000 employees this year. That is about 7% of their workforce. They have also had issues with their return on invested capital. It's fallen from 8.8% to 6.3%. They've also had their cost of capital increase from 8.9% to 11.3%. And one of the big issues with investing in the business right now is interest rates. Interest rates have risen in a massive way over the last year, and that is going to make capital less efficient in terms of your rate of return, but also the cost of your capital more expensive. I think what we will start to see on the back half of this year and maybe early 2024 is the potential of rate cuts coming into play for the Fed, and that is something that could help PayPal in a massive way to get back to the rate of return that investors are expecting. One thing that I find very interesting in this article is they talk about how management is providing guidance. So over the last 8 quarters, we have seen the average EPS surprise come in at 4.69% and the average revenue surprise come in at 0.66%. Here we have a chart of PayPal's average surprise of revenue and EPS compared to Square, American Express, Visa, and MasterCard. And what you can see from these numbers is that they are significantly lower for PayPal compared to a lot of these other competitors. And one of the things investors like to see is management come in with conservative guidance. They don't want companies always hitting their numbers or just barely hitting their numbers. They want to see large beats because that tells us that the company is outperforming what management even expects. And you want a management company that is kind of padding their numbers just a little bit in case something were to happen where we see the economy turn down. You don't want to see the company come in with huge misses. That's what investors absolutely hate. So when the management company is a little bit more conservative, you don't have the chances of those big misses. And with that said, we actually are seeing a lot of management turnover at PayPal. So their CEO, their CFO, and their CPO are all departing the company here in a short period of time. And that opens up a lot of new spaces at the C-suite level for people to come in with a new perspective on PayPal and really reinvigorate the business. It also provides the new management team to adjust how they guide the business forward. They could come in and guide more conservatively clearly, and also in total just provides for a new vision for where PayPal is headed in the future. Now let's go ahead and jump into the bull case. Fitch Ratings gave PayPal's most recent issued yen bonds an A rating, citing a history of conservative balance sheet management and growth trends in e-commerce. And part of that conservative balance sheet is their large cash balance. Right now they are sitting on $10.6 billion in cash. One thing that this article mentions that I find very interesting is the attempted acquisition of Pinterest by PayPal, and this was back in 2021. And in my opinion, this probably wasn't the right acquisition for PayPal to begin with. But if they reached out to a company like Etsy would be a perfect acquisition for PayPal because they are very much like a eBay. They could partner with PayPal and use PayPal as the payment platform for Etsy. And in my opinion, again, that would be a perfect relationship that would fit exactly into how PayPal has built out their business model to this point. So maybe Pinterest wasn't the right acquisition, but companies similar to them could be good acquisitions for PayPal in the near future. The biggest bull case for PayPal, in my opinion, comes from the numbers, and that's what I love to see from a business. When we look at their numbers across the board, they have tremendous amounts of growth. Their active accounts in 2015 was sitting at 181 million, and now in 2022 they are sitting at 435 million, and that's even up by almost 50% from 2019 numbers when they were sitting at 305 million. And over the last 5 years, that's a 14% growth CAGR. When we look at their total payment volume, that is also up in a tremendous way. We could see in 2015 it was sitting at $288 billion. In 2022 it's sitting at $1.36 trillion, and that is a 24% CAGR over the last 5 years. Total revenue we can see was sitting at $9.2 billion in 2015. As of 2022 it was sitting at $27.5 billion, which is a 16% CAGR over the last 5 years. Non-GAAP EPS in 2015 was sitting at $1.29. In 2022 it's sitting at $4.13, which is a 17% CAGR. And free cash flow is also up. In 2015 it was sitting at $1.8 billion, and in 2022 is sitting at $5.1 billion, which is a 22% CAGR over the last 5 years. And in my opinion, that growth will not slow down anytime soon. We can see that revenue for e-commerce in the US in 2022 was sitting at $856 billion, and analysts are expecting that number to hit $1.56 trillion in 2027. And PayPal is in the perfect position to capitalize from that growth. Let's leave off this video by taking a look at PayPal's valuation. So in this Seeking Alpha article, they have PayPal's PE ratio sitting at 12.5, and they have the S&P 500's multiple sitting at 19. So what we can do is we can run a quick ratio on where PayPal would have to trade at if it were to trade at a 19 forward PE ratio. So right now, again, PayPal is trading at $66.43. They currently have a forward PE ratio of 12.5, and we are comparing them against the S&P 500, which is trading at 19. So if they were to trade up to a 19 forward PE ratio and earnings were to stay flat, we would see their price go up to $100.97, which would be a 52% return based off the current stock price. So with all of that said, personally, I do like PayPal. I have it as a position in my portfolio for a reason. I think they have a lot of growth in front of them. And I think when you look at all the numbers, the fact is there is still plenty of growth in this industry. And even with additional competition coming into the industry, I think there is a lot of room for PayPal to continue to grow. I am also excited by the fact that they are going to have a new management team coming in. I think that has the potential to really help grow the stock and build out the valuation, because the new CEO that's going to come in is going to have some stock-based compensation, and they are going to be very motivated to increase the stock price and really build the future of PayPal as a business. So that is definitely something that I'm looking forward to with this company. But like I said in this video, do not buy a company just because some random person on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.